Hello, this is John Piper with the weekend video clip, and it's Saturday the 3rd of October. I thought to start with this hourly chart of the Dow. Yesterday we had the non-farm payrolls. Yet again the figures were disappointing from the economy point of view, and I think this is quite an interesting point in the sense that we got this big decline down initially. Again, interest rates are unlikely to be risen, and again my view is that going forwards we're going to see this kind of just disappointing data for some time to come unless there's some fundamental change. I'm currently with my daughter on holiday in Spain, and she now runs 300 million for a leading investment bank, and I was explaining to her that the reason the market went down, maybe should be explaining to me, but anyway, was because we're now in a bear market, and the market will focus on the bad news element of the news item, i.e. the economy not doing so well, rather than the positive aspect, i.e. that interest rates won't be rising. The Dow then lurched upwards again, and my daughter said, well, how do you explain that? Which I thought was a pretty good question, and the way I would explain that is that we're now in a corrective phase in the bear market. So if you like, the plunge down was the initial reaction based on the fact we're in a bear market, and the rally up was because we're actually in a corrective phase, and so buyers came in to push it up. I'm not sure that's 100% convincing, but nevertheless it'll suffice for now. So look at this in a bit more detail. Okay, this is a 4-hourly chart which shows the big low we saw back in August. My count is that we're seeing an A, B, C, A wave, a B wave, and then a C wave to there, which is wave A of the bigger move. This is wave B, and we've now got wave C coming in with quite a nice corrective move down to there, ABC, and now the next move coming in. Given the length of time that we've seen the market decline, 6 months in some cases, I think we're going to see, well, it certainly be in line with that time frame that we're going to see a rally for about 3 months, and that would of course take us into the Christmas period. This move here has already lasted 1 month. This is now 2 or 3 weeks, so another month or two. I guess it's a bit short of the Christmas period, but given the time of year, it seems quite likely we might see that. The October expiry is of course a concern. The October expiry has been on occasion quite deadly for the markets. That's one area we're going to watch quite carefully, and that'll be coming up in 2 weeks' time. But right now it looks positive, and so I would suggest cautious long positions. I say cautious because I think we are in a bear market now. This is the daily chart of the DAX, another clear pattern. We have the A, B, C, A wave, followed by an irregular A, B, C, B wave, and then a very clear 1, 2, 3, 4, A, B, C, 4, followed by 5, and then a 5 wave decline, which I itemized during the week, down to that low there, and I then called the low. I said in my Tuesday report that the low was in, and that seems to be the case. And as you can see from here, we started in April and we've gone all the way through to October, so 6 months, allowing a fairly solid rally now. I mean, for those of you who like speculative or predatory praise, then Volkswagen could be one stock you might consider. Again, that's not a recommendation, it's just something might be worth looking at. Let's have a look at this in a bit more detail. Okay, this is the hourly chart of the DAX. This is the low, 1, 2, 3, 4, 5, followed by a sharp ABC, quite sharp lurches down. I mean, it's 250 points in a fairly short space of time, but then the market's reversed. Buyers came in, and it's looking good for the shorter term. Right, FTSE, we have this initial possible one wave, not very clearly formed, 2, 3, 4, 5, followed by an ABCB wave. So the first 5 waves now looks like an A, and this sharp move down is a C wave. We then have an ABC, followed by another A, B, C, or that could be a 5, but it's not terribly relevant. This chart's misleading. The actual current level is around 6220, so again we've had that the market come down and go up again, and again I'm looking at this as a positive. It just depends whether I think we're going to rally into the October expiry, 2 more weeks, and if we can get past that, then I think we'll go into the January expiry probably. Okay, this is the hourly chart of gold. We can see a clear 5-wave advance from this low here. 1, 2, 5 waves up to there, 3, 4 and 5. Then there's a very impulsive decline, but that may be a correction. The news brought on a solid rally up to the 40 level. We really need to see a move above here to convince that I mean the pattern is not ideal, and we need to see this rally continue into next week and beyond, with acceptance above 1156, 1157 to really say that I remain long of gold, and I would tend to be buying more coins if we do in fact go lower, but I want to see some kind of reversal first. Okay, this is a 4-hour chart of the euro dollar. We had this 5-wave decline down to there, nice ABC, another decent decline, another ABC, I think that's where I'm counting anyway. So we've got a couple of decent spikes there. Spike on the news yesterday, but we have this key support level around 111, which looks to me like it's due to be broken, so that's still a reasonable trade. In fact, with this spike above 11300, there's a possibility of an entry around 11200 thereabouts, depending on what price you how you want to judge your risk, etc., etc. It's up to each individual trader to determine entry points, risk, all that kind of stuff, but there's certainly a setup there. Right, finally look at the Chinese market. We saw this decline here, which I was counting as a 3rd wave, but if this is the 4th wave, it's certainly going on rather a long period of time. In fact, there is a clear triangle here, and we're now broken to the upside of that triangle. I did highlight that in a recent report. The wave pattern is a clear A, B, C, D, followed by an E, which is the classic triangular pattern. So we've got to break to the upside here. I remain short here, but my stop is now above 3.2, so I'll be getting out if that happens. I'll be stopped out if that happens. I think certainly the wave pattern still calls for more decline, but we have to have obviously accept that other markets look like they've seen lows, so China may have done also, although there's no actual evidence as such. All we've seen so far is this corrective drift, but the triangle is now given a buy signal. So again, that's something that's set up that may be of interest to you. Okay, on that note, I'll call it a day. I hope you found it interesting and useful. I'm back with the report on Tuesday morning for subscribers. This is a good time to subscribe if you're interested in this kind of action. I think there could be some really big moves coming, and big call is what well, the big calls are what big calls all about, quite obviously. Have a great weekend. Thanks for listening, and bye for now.